Today I want to talk about how over $100 trillion has been stolen by these hedge funds, creating synthetic shares and engaging in naked short selling, but how this illegal scheme is about to all come crashing down. So stay tuned and let's make some money. And I want to dive straight in with the key information. So, Logan tweeted saying Wall Street has stolen over $100 trillion by what? Naked short selling. Now you may have seen this video before, but it's an ex-CIA agent explaining how his team has tracked over $100 trillion that was stolen by Wall Street.
The illicit wealth in the world has been tracked by the National Security Agency for the past 15 years. We now know beyond a shadow of a doubt that Wall Street has stolen $100 trillion from Main Street with naked short selling. We also know that Wall Street has laundered $100 trillion in dirty money.
Not only did he perform that live interview, but he went one step further to write a letter directly to the President of the United States. And he said, "Mr. President, it is my good fortune to be a former spy and also good friends with Bill Binney and known to Mike Flynn. It's taken me months to arrange for Bill Binney to speak on the record in a 16-minute video at this website." He said with 10 people in 30 days, Bill can deliver all of the data you need to confiscate through civil and criminal forfeiture $100 trillion or more in assets acquired by various Wall Street financial criminals, among whom Goldman Sachs is by far the largest, using naked short selling and money laundering to steal from all. He said Wall Street has destroyed over 10,000 companies, thousands of innovations, and millions of jobs through its criminal financial practices, all condoned and enabled by the Senate Banking Committee, the Department of Justice, the FBI, and the SEC. He said by combing data from the NSA from a forced audit of the DTCC and data from ShareIntel, a company ripe for acquisition by the Department of Justice, you can completely bypass Wall Street lawyers and the decades of delay that comes with those lawyers and begin confiscating stocks of gold, silver, art, mansions and condos all over the world. Now I'll leave the link down in the description below to where you can read the full letter and also learn more about Bill Binney, but he also wrote a separate letter which I want to touch on briefly. In the letter he said this information would not be used for a legal process, but it would be used to confront the leaders within this well-established and well-protected criminal network. Among these are the top naked short sellers and money launderers: Goldman Sachs, Merrill Lynch, JP Morgan Chase, Credit Suisse, Deutsche Bank and UBS. Now something I find very interesting is these last three banks here, Credit Suisse, Deutsche Bank and UBS, whose banks' credit default swaps have just hit record highs. And that's because these banks have been naked short selling for too long, they're all being found out, they're taking on giant losses, and they're really feeling the pinch. It's also funny that the major proprietors of naked shorting are major banks like Goldman Sachs, JP Morgan Chase and Credit Suisse and the others. It's not necessarily these hedge funds that are the major proprietors of naked shorting, because obviously they need assistance to be able to create synthetic shares properly. Any hedge fund can sell a share they don't own without locating that share, but they incur an FTD that has to be closed out or hidden somehow. But obviously if they can have the assistance of a major market maker or a prime broker, they can use their market maker exemption and they never have to close out of those synthetic shares. Therefore, it's likely the parties that are most over-leveraged and most heavily exposed to the AMC synthetic short positions aren't necessarily small hedge funds or even necessarily Citadel, but some of the largest major banks. And as a number of these major banks are already on the edge of bankruptcy, and a number of other major banks like Goldman Sachs are already seeing their credit default swaps starting to spike, it won't be long until they end up going bankrupt or being forced to close out of those shorts. Guys, if you haven't already, be sure to sign up to Moomoo right now using the link in the description below. You can currently get 15 free stocks worth up to a whopping total of $30,000. Moomoo also don't accept payment for order flow. They don't route your trades through Citadel or through Apex Brokers. They route their trades themselves and they don't sell your order flow. Therefore, Moomoo is brilliant for buying those AMC, those GameStop and those Ape shares, and the Moomoo platform is also very easy to use and is very customizable. And it seems FINRA has actually started to crack down on these entities, even though the punishments so far are fairly small. Aaron tweeted saying, breaking news, FINRA has just issued UBS 2 AWCs for a plethora of violations of Regulation SHO and for incurring FTDs for years. So this lawsuit basically alleges how UBS failed to locate shares in 75,000 separate transactions and is now paying a fine of $2.5 million. Now, obviously, that is a very small fine, as I'm sure in those 75,000 separate transactions, they likely profited billions. But it is interesting to see the SEC and FINRA finally doing something. They've been issuing more and more fines for regulation SHO violations and synthetic shorting violations to firms like UBS, Credit Suisse, and a number of others. They're clearly aware that times are changing, they're clearly aware the stock market is crashing, and they need to be seen doing something and not actually aiding these hedge fund and Wall Street villains. Therefore, when the economy does end up crashing, the SEC, FINRA, the Department of Justice, and everybody else will be able to say at least we have tried doing something, we just couldn't stop them in time, rather than being seen doing absolutely nothing and actually assisting these villains. But it is a step in the right direction, and it is funny to see a number of these major naked short sellers now on the brink of bankruptcy and facing tons and tons of fines. And speaking of those major naked short sellers on the brink of bankruptcy, Zero Hedge has tweeted saying Credit Suisse mulls outside investor in their investment bank spin-off. Clearly, Credit Suisse's investment banking division is so close to going bankrupt, they're considering receiving external investment to try and kickstart the bank again. I think if the Swiss central bank is monitoring the situation closely and they're considering external investment, they're likely weeks, if not days away from going bankrupt. And as Bloomberg tweeted, they said Credit Suisse's deputy wealth management head for Asia is leaving after about 2 decades with the bank, joining a wave of departures. Clearly, Credit Suisse is panicking so much they're firing thousands of employees to try and cut costs to desperately save the bank. If they're cutting top employees, such as their wealth management head of Asia, clearly the bank is struggling so much and they are on the brink of bankruptcy. And something that I found very interesting that would make a very interesting scenario is Mr. Flipper tweeting AMC investors, would you support Adam Aron hiring a third party such as ShareIntel to investigate potential illegal activity such as naked short selling and synthetic shares in AMC and Ape? Now, obviously, ShareIntel is the same firm that Bill Binney used to discover $100 trillion or more of assets acquired by naked shorting. Clearly, ShareIntel really know their stuff and they really can investigate naked short selling, as they've already discovered $100 trillion worth of illegal money generated. If Adam Aron worked directly with ShareIntel, we would finally have an accurate count of exactly how many synthetic shares there really are in AMC and Ape. Now, in these 528 votes, a whopping 83.7% of us voted for Adam Aron to use ShareIntel to investigate naked short selling. Hopefully Adam Aron did actually see this tweet and is currently engaging or is thinking of engaging ShareIntel to do some digging. But in terms of how the wider economy is doing, Ottavio tweeted saying the largest 4-month drop in job openings since the beginning of lockdowns. He said, to be fair, this number is falling from very high levels, but the current drop is massive and must be emphasised. He said today's decline in US job openings is way worse than any print we saw during the great financial crisis and the tech bust. Obviously, rising employment is a massive sign of recession and is a massive sign of a collapsing economy and a collapsing stock market, and this chart shows just that. The number of US job openings decreased massively during the years of 2000 and 2001 and 2008 and 2009 during the global financial crisis. Obviously, US job openings and unemployment rose massively during 2020, but that was a result of the pandemic, but so far it is rising massively once again. For the last print, we saw more US job openings than we ever saw during the 2008 global financial crisis or the year 2000 tech bust. I think this goes to show the current economy is not fine and the stock market will be crashing further over the next few months. And obviously a further crash in the stock market will cause hundreds of hedge funds to end up being liquidated, forced to close out of their short positions. And as Inflation Tracker tweeted, he said a Goldman Sachs investment banker just sent me this DM. He said he also expects a huge round of layoffs going on in 2023. So he received this text saying, I work at Goldman Sachs in the IBD division, or the investment banking division. A lot of companies are holding back on mergers and acquisitions activity, and 20% of my team was let go last week. He said nobody wants to go public or be acquired in this current market because everyone knows a recession is coming. And as Wall Street Silver tweeted, to support that, Facebook is reportedly laying off thousands of employees. Again, this just adds to the long list of tech layoffs. We've seen layoffs in Google, Apple, Amazon, and many other companies, and now Facebook is joining the herd. Facebook aren't just laying off 10 or 20 employees, they're laying off thousands. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.